The U.S. stock market is currently closed. At the end of the last trading session on Thursday, October 9, 2025, Lumen Technologies Inc., ticker LUMN, closed at a price of $6.85 per share, marking a significant intraday drop of 19 cents or 2.70%. Now, on the surface, a sub-$7 stock dropping nearly 3% in a single day barely registers as a blip in a market captivated by the volatile swings of giants like Tesla stock or Apple stock. The common expectation for Lumen is straightforward. It's a legacy telecom company, a dinosaur from the old world of landlines, slowly sinking under the weight of a massive debt load. Many see it as a classic yield trap, where an enticingly high dividend masks a deteriorating business. But the reality of what's happening under the hood is far more complex and tells a story of a company at a critical crossroads, a narrative that the daily price action both reflects and obscures. The real story isn't just about the decline, it's about a desperate race against time between decaying copper wires and a potentially lucrative fiber optic future. The general belief, widely circulated on investing forums and discussed by users of the Robinhood app, is that Lumen's primary appeal is its dividend. For those seeking income, the yield appears incredibly attractive, especially when compared to the paltry returns on savings accounts. This has made it a popular, if controversial, choice for some forms of online investing. However, this singular focus is a dangerous oversimplification. The contrarian take, the one that serious investors using more sophisticated platforms like interactive brokers are grappling with, is whether the market has excessively punished the stock, creating a deep value opportunity. The question isn't just about the dividend's sustainability, it's about whether Lumen's vast national fiber network, one of the largest in the country, is being fundamentally mispriced by a market obsessed with its declining legacy products. The tension between the company's burdensome past and its potential future as a fiber-centric enterprise is where the true analysis lies. This isn't a simple buy or sell. It's a high-stakes bet on a corporate transformation that is far from guaranteed. Let's dissect the recent stock movement more closely. That 2.70% drop to $6.85 wasn't an isolated event. It's part of a brutal, protracted downtrend that has seen the stock lose a substantial portion of its value over the past year. Looking at the trading volume on the day, it was moderately heavy, suggesting that the selling pressure isn't just a few retail investors getting spooked. There was conviction behind the move. This is the kind of data that traders on the interactive brokers trading platforms scrutinize, looking for signs of institutional capitulation or accumulation. In Lumen's case, recent trends suggest more of the former. Many large funds, the kind that might use Fidelity Wealth Management services for their clients, have been trimming or exiting their positions, spooked by the combination of declining revenues and a hawkish Federal Reserve. Rising interest rates are poison for a company as heavily leveraged as Lumen. Each basis point hike increases the cost of servicing its colossal debt, putting more and more pressure on the cash flow that is supposed to support operations, capital expenditures for fiber build-out, and of course, that all-important dividend. The reaction to the company's most recent earnings report was a perfect microcosm of this struggle. While the company might have met or slightly beaten heavily reduced analyst expectations, the underlying trends were concerning. The growth in its next-generation fiber services, branded as Quantum Fiber, was present, but it wasn't nearly fast enough to offset the accelerated decline in its legacy voice and copper-based internet services. This is the core of the bear thesis. The market is looking at the numbers and concluding that Lumen is trying to fill a bathtub with a teaspoon, while the drain is wide open. For every new high-margin fiber customer it signs up, it's losing several low-margin but still revenue-generating legacy customers. The macroeconomic environment acts as a headwind against this already difficult situation. When consumers and businesses are tightening their belts, they may delay upgrading services, further slowing the transition. This is far cry from the secular growth stories powering a name like Nvidia stock, and it requires a completely different mindset for any form of self-investing. An investor has to be willing to stomach volatility and uncertainty. So, what does Lumen actually do? At its core, Lumen Technologies is a telecommunications and technology company. It provides a massive range of services, including network infrastructure, cloud connectivity, voice and security solutions to both business customers and residential consumers. Its most valuable asset is its immense terrestrial and subsea fiber network that spans continents. The business is broadly split into two segments. The enterprise side serves businesses of all sizes, from small companies to massive global corporations, providing the critical network backbone they need to operate. The mass market segment is what most people are familiar with, the consumer-facing internet and phone services. The company's entire strategic direction for the past few years has been to pivot away from the declining copper-based assets and pour resources into expanding its fiber-to-the-home footprint. To fund this and pay down debt, management has been on a selling spree, divesting non-core assets and entire regional operations for billions of dollars. This strategy, while logical, has also resulted in a smaller, leaner company with shrinking overall revenues, a fact that spooks investors who are used to prioritizing top-line growth. A novice investor looking for investment help might see shrinking revenue and run for the hills, while a seasoned analyst might see it as necessary pruning to allow for healthier future growth. Many investing sites offer tools to compare these metrics, but the interpretation is what matters. Looking toward the future, the bull and bear cases present two starkly different realities. The bearish outlook, which currently dominates market sentiment, is that the expectation of decline is the reality. In this scenario, the debt load proves unmanageable in a higher rate world. The revenue erosion from legacy products continues to outpace fiber growth, leading to further cash flow deterioration. Inevitably, management is forced to make the dreaded decision, a dividend cut. Such an announcement would likely cause the final wave of income-focused investors to flee, pushing the stock price to new lows. Competition from cable companies and mobile 5G home internet providers will cap its growth potential, and the company will be stuck in a permanent state of managed decline. This is the outcome many fear when they see the stock chart on their SoFi trading platform or Fidelity mobile app. The big question is the dividend. Comment below if you think Lumen will be forced to cut its dividend in the next 12 months. Yes or no? Conversely, the bullish scenario is one where today's reality falls dramatically short of the company's hidden potential. The expectation of failure has created a situation where the stock is trading for less than the sum of its parts. Bulls argue that the market is assigning little to no value to the company's most important asset, that global fiber network. They believe that as the world demands more and more data bandwidth, this infrastructure will become increasingly valuable. In this future, the asset sales successfully shore up the balance sheet, reducing debt to manageable levels. The quantum fiber build-out accelerates, and growth in this segment finally reaches a tipping point where it overshadows the legacy decline. The company emerges as a leaner, stronger, fiber-focused entity. For those who invest through an individual brokerage account with Fidelity Investments or use a robo-advisor like Schwab Intelligent Portfolios, this represents the classic deep value play, buying assets for pennies on the dollar and waiting for the market to recognize their true value. Potential catalysts could include a surprisingly strong earnings report, a major new enterprise contract, or even an activist investor taking a stake and pushing for a more aggressive monetization of the fiber network. In the end, the story of Lumen Technologies is a masterclass in the tension between market expectation and underlying reality. The prevailing expectation is of failure, a slow-motion collapse of a debt-ridden telco. The price action we saw, that 2.70% decline, is a direct reflection of that narrative. It's the market's vote of no confidence. But the deeper reality is that of a company in a painful but necessary transition. It is a high-wire act, balancing the decay of the old with the construction of the new. The outcome is not predetermined. Whether the future holds a value trap or a generational buying opportunity depends entirely on execution, financial discipline, and the unforgiving macroeconomic landscape. Understanding this conflict is the key to making an informed decision, moving beyond the simple price chart to see the complex machinery at work beneath the surface of the stock. Disclaimer: this content is for educational and informational purposes only. It is not financial or investment advice. Please do your own research or consult a licensed financial advisor before making any investment decisions. Don't forget to like, comment, and share. Subscribe for more finance updates and market insights.